JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 23rd of February 2022. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a view the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com, and yep, click on the research tab right there on the top. So now then, jumping into the charts, guys, so let's have a first look at Nikkei as always. So yeah, Nikkei did drift a little bit to the downside here, but not really something that is drastic here. As I said before, in order for me to, let's say, aim for some lower levels here, what I need here, I would like to see a drop below that lowest point of January. But for now, what I've mentioned previously as well was that if we do drop below that 26,765 level right here, then my next target is the area around that 26,327, or the same lowest point of January near that 26,057 mark. So in other words, for now everything's kind of working according to the plan here. We are shifting a little bit more to the downside. However, of course, we'll continue monitoring the developments around the world. And yeah, of course, for now, I mean, yesterday, if you've seen the markets in the U.S. managed to recover somewhat a little bit, but then kind of, yeah, by the end of the day, they reversed back down. Europe was also seen kind of a little bit more stable, I would say. But yeah, well, let's see how today's day is going to play out. For now, if we come back to Nikkei here, of course we are still trending lower here. We're still trading below this downside line, so if you're looking for some sort of upside here, at least in the near term, then well, you need to see at least a wait for a break of this short-term tentative downside resistance line taken from the high of the 10th of February. But even then, yes, we could consider a bit of a move to the upside here, but even then there are a bunch of obstacles higher, and in general, even if it, let's say, does move strongly to the upside here, we do have another downside line to consider here. So in other words, overall the trend is still to the downside. However, these temporary kind of shoots to the upside could happen. The cash index, for example, right now is sitting at around 26,730. So yep, we did kind of rebound nicely here, but we're still below this downside line, the one that I mentioned. So keep your eyes on it. Yes, like I said, the world kind of it seems like the world is trying to get that correction for now. But yeah, of course, let's not get ahead of ourselves. Let's see how this is going to play out. For now, if you're looking for, let's say, some much lower levels here, then at least wait for a drop below that January's low first, which is roughly around that 26,057 level. Now, Shanghai Composite, now this one's a little bit more promising. Everything's kind of according to the plan that I talked about yesterday as well, that I said to keep your eyes on some of these hurdles, and in general, we might see maybe a bit of a retracement here back to the upside. So far, yes, we're getting that nice push higher, but yeah, the the problem here, I would say, from the technical side is this downside line taken from the high of the 13th of December. Now, if it holds, if it continues to hold, even though, like I said, we could get a nice move higher here, but if this downside line continues to provide resistance together with the 200-day EMA, because as I can see here, it's kind of, it seems that it's going to coincide perfectly here, then yes, another slide could be possible. For now, being very careful here. Yes, we've climbed back above the 21-day EMA, which could be seen as a positive sign here for now. However, that positivity may fade out if we, like I said, if we struggle to overcome this downside line. If we do pop above it and we do climb above all of the EMAs here on our daily chart, then yes, we could maybe consider a nice move here, a larger move to the upside. But for now, it is how it is. So we're keeping an eye on this downside line, and yeah, like I said, keeping an eye on this 21-day EMA as well from the very short-term perspective, because if we do stay above it, then like I said, I'll aim for a bit of a kind of a larger correction here to the upside, and then we'll just take it from there. For now, yeah, that's the game plan. Hong Kong's Hang Seng Index. Now this one's quite interesting, and I talked about this hurdle right here, the low, the 31st of January, which we managed to reach perfectly yesterday. We managed to overcome it as well, and we kind of stayed above it. And what I said, that if we stay above this hurdle as well, then maybe a bit of a retracement here, back up could be possible. However, not everything is that easy here, and if we're looking for some more downside here, then, well, I mean, of course, we would need to see a nice good drop and a close below this hurdle, below this 23,470 zone, and then, yeah, we could aim for that lowest point of December. But at the moment, we're getting a nice little hold up here, so maybe even we could see a bit of a larger correction here to the upside, given that this hurdle here, the low of the of January 31st, acted as a good area of support. So if we do, like I said, rebound here, yeah, I'll aim for this 24,000 mark again, but around here I'll take it very carefully, because if the 21-day EMA also approaches this area, I mean, all this could play out nicely here for the bears later on, if, let's say, the index struggles to overcome this whole territory. However, if it pushes above that 24,220 zone right here, maybe this could spark a bit of hope here in the eyes of the bulls. And in other words, I mean, also what could happen here, if, let's say, for now, this index continues to let's say, trade here, let's say if it struggles to drop below that 23,470, if it struggles to do so, we might see maybe a bit of sideways activity here, and basically what we could get here ourselves is maybe a bit of a range, but again, not trying to say that this is exactly what's going to happen here, but we are trying to consider all the possible options here. For now, I would say like this, that as long as we stay above this hurdle here, this 23,470, we might see maybe a bit of a rebound. Then I'll aim for that 24,000 level again, and that 21-day EMA. But if that gets cleared and we pop above those, and we drop, and we, sorry, not drop, but we rise above the 24,220 zone here, then we could be placed above the midpoint of this potential range, and yeah, then we could see maybe a bit of a move higher. So probably my arrow needs to be drawn this way for now. The German index, DAX. So yeah, looking at this beautiful recovery, everything's in line. And if you remember yesterday, I talked about this idea of having a bit of a retracement here, a 23.6% retracement on the Fibonacci. And yeah, well, I mean, first of all, I need to adjust this a little bit. We did drop a little bit lower. However, that does not mean that we did not retrace the full 23.6 here. Well, we did, and we did a little bit more than that. Almost, I would say, almost 38.2% retracement here on the Fibonacci. So yeah, of course, we'll keep a close eye on it today. The index, the cash index, is currently trading at around 14,695, or actually more of a 700 level. So yeah, it's not far from where it closed yesterday. Actually, I would say the same, the same area. So it will be quite interesting to see what's going to happen further today. I mean, maybe a bit more retracement could be possible. I'm still aiming for that 38.2%. If we clear this this level here, the 38.2% retracement, then yeah, maybe we could go for a move back to that psychological 15,000 mark. But again, let's not rush into anything. Let's go slowly on this, step by step. And for now, like I said, I'll aim for that 38.2% retracement here on the Fibonacci, which actually, as you can see, almost coincides perfectly with the lowest point of October. I mean, that's great, kind of a good match. Let's see if that works out, of course. If it suddenly starts, if it suddenly starts falling back below this 23.6% retracement here, which is roughly around that 14,640 zone, maybe we're we could end up being somewhere around here. We could start moving maybe sideways a little bit, consolidating. So that's why I would say, if you're really skeptical and you're looking for some downside here, well, at least wait for a drop below, another drop below this highlighted territory right here. I know that yesterday we did get that drop, but let's see if we can get another one here. Below this 14,400 zone, approximately around there, guys. Of course, we don't get me wrong, we do have the low of yesterday. That's this is a level for you if you need a little bit more convincing. For example, this 14,358 zone. That's the low of yesterday, and if we drop below that, then this will confirm a forthcoming lower low, and potentially more sellers could join in. And my next target then could be somewhere around here, near the low of the 5th of March. I think it's the lowest point. Yep, that's correct. That's the lowest point of March of 2021. And then, yeah, we'll take it from there, guys. That's roughly, oh, by the way, that's roughly around that 13,868 zone. So far, like I said, for now, I'm, like I said, keeping an eye on this 38.2% retracement here, which kind of coincides almost with this lowest point of October, and then I'll take it from there. Now, jumping into the Ftse 100, guys. I mean, haven't looked at this one for quite a while, as you can see by the lines here. I mean, that's when last time I kind of picked up on it. But first of all, let me just remove all the drawings and start fresh. Now, what do we have here is we have an index which yesterday managed to drop heavily and test its 100-day EMA here, shown as the green line, as you can see. So, in general, for now, looking at this, I mean, everything looks quite, I would say, bearish, of course, from the short-term perspective, because from the longer-term perspective, I mean, looking at this, I mean, we can try to draw a bunch of upside lines here. I mean, there's different ways that you can, you can draw this. I mean, you can draw it, let's say, this way as well, and basically this is probably the more interesting one, this short-term upside support line taken. Actually, I think it's more of going to be now a medium-term one, almost a medium-term upside support line taken from the low, the 30th of November. And as you can see here, I mean, we had a beautiful move yesterday below it, and a beautiful false breakout. So, so far, yes, it's holding nicely here, and well, let's see if if this can reverse back to the upside somehow. However, I'm not saying that I'm getting very positive here. No, because for now some confirmation breaks are still needed, and let's say the cash index is currently sitting at around 7,488 zone. So basically not far from where it closed yesterday, so we're kind of stuck in this area. And if you're looking for some upside, guys, well, then at least wait for a break of that downside line that I just marked here, taken from the high of the 10th of February. And yeah, just maybe a push above the 7,571 zone could do the trick for a few more buyers here, and at the same time we would be placed above all of the EMAs. However, for the downside, if it starts dropping below this hurdle here, the low of the 21st, actually I would say the low of last week near the 7,446 territory here, if we drop again below this, then yep, we'll aim for the downside again. So we'll aim for that low of yesterday, or even below that. The next target could be the lowest point of January. Or actually, let me just double check if this is the lowest point. Yep, that's correct. That's the lowest point of January, near the 7,284 zone. Dow Jones Industrial Average drifted lower. Yes, we had initially kind of we did see a bit of a correction to the upside during, after the opening bell, but it quickly kind of faded away, and we drifted lower. However, as you can see, we did not really, fall drastically here. So, and that's why, I mean, the market is doing what it needs to do. And yep, anything, what surrounds what's happening right now in the geopolitical arena, I mean, yes, it is having its negative effect, however, not significantly. I think that, the markets here are waiting more for the Fed. So let's see, for now, I mean, we can see the index here, trading around here. We do have this lowest point of January near the 33,150 zone. So if we drop below that, then yes, we'll go for some lower levels, because a forthcoming lower low would be confirmed. Now, in terms of the, let's say, further levels here, if we do drop below this hurdle, sorry, not this one, but below this lowest point of January near the 33,150, then yes, my next target will be somewhere around here, and this is what I'm drawing right now. This area roughly between or actually I would say roughly near that 32,000 mark. As you can see here, it's near the high of the 24th of February of last year, and near the low of the 25th of March of last year as well. But for that, guys, we need to see that nice good drop below this hurdle first. At the moment, what we could see here is maybe a bit of a rebound as well. The cash index, for example, right now is trading at around 33,690 zone, so that's above where we closed yesterday, but still below this little hurdle right here, this 33,807, and that's marked by the low of the 28th of January. So in order for me to maybe consider a bit of an upside here move, a bit of a corrective move to the upside, then yes, a push above this hurdle is needed, and then we will take it from there, because maybe it'll get a hold up somewhere around this near this upside line, which we broke recently. So, and then, like I said, we'll just take it from there. I don't want to over speculate on this. For now, it's quite interesting. The developments everything is quite interesting right now here with all the indices. So let's see. Like I said, let's see if we can climb back above this 33,807 zone. DXY, dollar index. So I'm not going to spend too much time on this one, because the analysis is the same as it was yesterday. I'm neutral, well, heck, I would say cautiously bullish on this one maybe, but I need that confirmation break here above this 96.30 zone. Yesterday we came close to testing it, but yeah, failed to kind of break it, and yeah, we're still stuck, and we're still oscillating around that 21-day EMA. So not really, not really doing much here. For the downside, I need to see a break of this upside line, these two upside lines, and then yeah, we'll go for maybe some lower levels. Gold, quick update. So good move yesterday. Almost managed to reach that highest point. I think it's the highest point of June. I'm sorry, just one moment. Sorry, no. Yeah, oh sorry, that's the highest point of June, but not the highest point of 2021. The highest point of 2021 is roughly around that 1959 level. So we managed to reach the highest point of June of 2021, which is near that 1916 zone. Yesterday we reached the area, and let me just put this one on the chart very quickly. We reached the area around here. There we go. Oh, there we go. 1914. So that's the area we managed to hit, and now we're seeing a bit of a retracement. So to be honest, everything's kind of in line here. I would say that in a way mission kind of was accomplished here, because initially I was targeting this 1916, but okay, we didn't hit it by $2. I mean, that's fine. We were targeting the area. We always target the areas, guys, near a certain level. So for now, what I'm considering here is that given that DXY is not giving up here, and it seems that it still wants to move higher, but if it does pop higher, then maybe we could see gold drifting a little bit to the downside here. And if, for example, equities do stabilize a little bit more today, then yeah, we could see gold drifting a little bit to the downside, maybe going for that little correction here lower. And if I apply my favorite Fibonacci levels here, well, we do have that 23.6% retracement to do still. So yeah, and that's roughly around that 1882 zone, and near this hurdle, the one that I talked about, the highest point of November. So yeah, let's see how all this is going to play out, guys. For now, considering maybe a bit of a retracement if DXY does pop higher, and if the equities do recover. If the equities continue to fall today, then well, maybe the bulls could pick up here and then drive this one, drive gold to the upside again. Quick update on WTI oil. Not much is happening here. I mean, yesterday we had a good push above this 93.34 zone. Initially I said that I'm going to be aiming higher if we do continue to trade above this 93.34 zone, and well, we were trading still, and I aimed higher. My next target was this 94.89 zone, but as you can see, it perfectly acted as a strong area of resistance, and kind of then the bears picked up here and sent the commodity lower. Now what I'm going to do here is I'm going to remove some of the lines here for now, for the upside. Now I need to see a push above this 94.89 zone for the downside. Now this is where I need to remove some of these arrows here, no longer needed. And what I'm going to do here is I'm going to stick to I'm going to clear up first of all here, and for the downside, I will start considering lower levels if we do eventually fall below that 21-day EMA. However, I'll get a little bit more excited with the downside if we drop below this 88.82 zone right there, and then we'll take it from there. Quick update on Litecoin. Still holding on to this hurdle, this 104 zone. As you can see here, that's the lowest point of 2021. It's quite interesting to see what's going to happen further here, because at the moment, yeah, everything's well, not everything, but some of it doesn't look very nice for the buyers. We do have some obstacles here on the way higher. For example, this downside line as well, that we would need to see a break of first before we could get comfortable with the upside. However, the positive side is that the fact that we are holding to this 104 zone. Yes, that kind of brings a bit more positivity, like I said, into this whole kind of near-term outlook. However, from the, let's say, just purely technical picture here, we are kind of forming somewhat of a maybe a descending triangle. So, and according to all the TA rules, these tend to break to the downside. So, be very careful here. Jumping into a few pairs very quickly. AUD/USD, so nicely pushing to the upside. Yesterday we had a bit of a correction here, but that's all fine. Now it seems that the pair is willing to move higher, and if we do pop above this 0.7249 zone marked by the high of the 10th of February, or in other words, the current highest point of February, if we do pop above that, then I'll aim for some higher levels. At the moment, the way everything's shaping up here, it seems that the market is not really giving up, and I think the risk-on environment still wants to prevail. However, again, it's very difficult nowadays, now in these times. So let's see. Like I said, let's go slowly, step by step. And if we do pop above this 0.7249 level, I'll go for the 200-day EMA or this 0.7314 level. USD CAD, very quickly on this one. Still watching this one. And if you remember a while ago when I covered this, I said that keep your eyes on this range where we're currently stuck in, and if you're looking for some upside, still wait for a break of this of the upper side of the range first. We need to see a clear pop above it, and we need to see the body of daily candle staying at least above this area in order to get a little bit more comfortable with the upside. If we don't, then I'm just going to continue observing the price action. I mean, it could move sideways here, so in other words, neutral for me. USD against the Mexican peso, guys. I mean, this is quite interesting. I mean, I do like to look at these exotic pairs sometimes because they do present themselves with nice opportunities. Now, looking at this picture, obviously you're seeing a nice, good kind of a hold up here, and maybe a possible kind of you know, potential, a good potential for a move further south. However, we need to see a stronger move because we keep getting these little violations here of this lowest point of January near the 20.28 zone. The area is still holding nicely. It's not giving up. But again, like I said, let's keep an eye on it. If DXY you know, remains, let's say, on the weaker side, then yes, we could see this one drifting lower. However, I don't want to exclude the upside scenario as well, because maybe, just maybe, all this could be forming a possible kind of double bottom pattern here. But in order to get maybe excited with the upside, a break of this downside line taken from the high of the 26th of November is needed. So there are a lot of things to consider here, guys. I mean, we are like with the US dollar against the Turkish lira yesterday, it popped higher. You know, we were waiting for that move since kind of the mid-January, and also that's what I'm saying, and I don't want you to miss out on something here. So basically, for now, it's quite interesting. It's very interesting which way this is going to pop here, and a lot will depend on, like I said, on the US dollar. GBP Aussie, so finally we broke this upside line and we dropped below that 1.88 zone. I talked about this, guys, if you remember, and I said that if we remain below this and we drop, first of all, if we drop below it and stay below it, then yes, we could go for some lower levels. The only little issue here is that we dropped yesterday below it, but we didn't really stay below it, and it was just a kind of a brief drop. And of course, today I'm aiming for this 100-day EMA first, which is roughly around that 1.8740. If we get a nice hold up around here, we might maybe see a bit of a rebound. However, if it fails, then yes, further declines are possible, because in general what I'm aiming here for is this 1.8647 level, which is also not far from that 200-day EMA. Another interesting pair is Euro JPY, and look at this. I mean, it does remind us something of a possible falling wedge pattern here. However, as long as it stays inside the pattern, we cannot really, let's say, you know, get comfortable with the upside, because it could still, you know, reverse back down here. And also, depending on how the market is going to play out today, if equities continue to slide, for example, or sorry, not continue, but if equities do slide, then we could see maybe the yen buying getting, you know, coming back in, and we could see this pair maybe drifting all the way towards this upside support line taken from the low, the 6th of December, and then yeah, we will just kind of take it from there. For now, I'm watching this upper side of the potential falling wedge pattern. If we break it and we pop above that 200-day EMA, I'll go for some higher levels. Now, jumping into Euro USD, again, not much is happening here, and to be honest, I'm going to stick to the same rule here, guys. And for the upside, for me to get very comfortable with the upside, I would like to see a push above this 1.1483, which could also be seen as a potential maybe neckline of a inverted head and shoulders pattern, a complex inverted head and shoulders pattern, or a drop below this 1.1235 zone here in order to go for lower levels. Now, as long as we're still here, I'm just kind of observing this one. I don't really like that, so yeah. From the very short-term perspective, for example, you could keep an eye on this 1.1396 zone, and if we pop above this, then yep, we could go for that this highlighted hurdle right here. But again, if we do pop above this 1.1396 zone, there are a bunch of obstacles here to consider. So we'll just, you know, be very careful with that idea. So yeah, guys, that's it for this session. I really hope you found it useful. And thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, and I really do, and your comments as well. So thank you very much for that. If you want to catch me tomorrow morning, oh, and by the way, just wanted to let you know that on Friday there won't be any espresso, and nor next week. I will resume with the espressos on the 7th of March, but there will be one tomorrow. So yeah, the last one this week. So join me, and yep, as always, at 7 o'clock GMT time. Thank you very much, and bye-bye.